At Berkshire Hathaway's 2024 annual general meeting, Warren Buffett was asked one of the most important questions in global finance.
Randy Jeffs from Irvine, California. The March 25th, 2024 Wall Street Journal reported that the Treasury market is about six-fold larger than before the 2008-2009 crisis. Do you think that at some point in time, the world market will no longer be able to absorb all of the U.S. debt being offered?
That's a huge question, basically asking if the world will one day lose its appetite for U.S. Treasuries. In other words, could America's growing debt become too big for the global market to handle? Buffett's answer wasn't a simple yes or no. It was vintage Buffett, measured, realistic, and deeply historical.
Well, I would say the answer, of course, I don't know, but my best speculation is that U.S. debt will be acceptable, but for a very long time, because there's not much alternative. But it won't be the quantity. The national debt was nothing to speak of, for a long, long time, and then it won't be the quantity. It'll be whether, in any way, inflation would get let loose in a way that really threatened the whole world economic situation, and there really isn't any.
He immediately admits he doesn't know for sure, a hallmark of Buffett's honesty. But his key idea is this: the dollar remains the world's safe haven because nothing else can truly replace it. Here Buffett makes a crucial distinction. The real danger isn't how much debt America issues, it's whether inflation spirals out of control and undermines trust in the dollar itself. To explain that point, he brings up one of his heroes, former Fed Chairman Paul Volcker.
And Paul Volcker worried about that back in before 1980, but he had threats on his life, and I happened to have a little contact with him at that time, and he was an amazing, amazing fellow that, in effect, decided that he had to act, or the financial system would fall apart in some way that he couldn't predict. And
Buffett reminds us that Volcker faced down double-digit inflation in the early 1980s, even at the cost of a deep recession and personal threats against his life. Volcker's courage saved the dollar's credibility. That's the kind of decisive leadership Buffett believes matters far more than the size of the national debt.
But it wasn't the quantity of U.S. debt that was being offered that threatened the system then. It was the fact that inflation and the future value of the dollar, the cash is trash type thinking that that was setting up something that could really affect the future of the world in terms of its economic system, and Paul Volcker took it on.
Buffett is saying debt alone doesn't sink a system. Losing trust in money does. Then he turns practical.
But I don't worry about the quantity. I worry about the fiscal deficit. But I'm not a worrier just generally. I mean, I think about it, but I don't sit and get up, work myself into a stew about it in the least. But I can't help thinking about it, and that's
classic Buffett calm. He's not panicking, but he's also not ignoring the problem. His concern is fiscal policy, the spending decisions made by Congress and the White House, not the Federal Reserve's actions.
But the fiscal deficit is what should be focused on. And Jay Powell is not only a great human being, but he's a very, very wise man. But he doesn't control fiscal policy, and every now and then he sends out a kind of a disguised plea for please pay attention to this, because that's where the trouble will be, if we have it.
And that's Buffett's final message. While the media obsesses over the Federal Reserve and interest rate moves, the real risk lies in Washington's budget choices. If deficits keep ballooning without discipline, that's when the world could start questioning America's long-term financial stability. So, when Warren Buffett says he's not worried about the quantity of debt, but about the fiscal deficit, he's giving investors a masterclass in priorities. As long as inflation stays under control and the U.S. remains the world's most trusted borrower, the dollar, and the debt that comes with it, will likely stay dominant. What do you think? Is Buffett right that there's no alternative to the dollar? Drop your thoughts in the comments below, and don't forget to like and subscribe for more deep dives into the wisdom of Warren Buffett. If you found this breakdown helpful, check out my other Buffett analysis right here. It'll change how you see investing.